Welcome to PhillipCapital Experts Talk. My name is Lin Sin from Unit Trust Research. Today, we are privileged to have Mr. Bill Maldonado, Chief Investment Officer Asia Pacific and Strategy Chief Investment Officer for Equities globally from HSBC Global Asset Management to take us through the investment prospect of Asia Pacific equities. Based in Hong Kong, Dr. Maldonado oversees the investment strategies in the region. He has worked in the asset management industry since joining HSBC in 1993 as an European derivative-based portfolio manager. Over the past 20 years, Dr. Maldonado has headed up a number of investment functions, such as non-traditional investments, including passive indexation mandates, funds of funds, structured products, and hedge funds. He became Strategy CIO, Equities, and CIO for the UK in 2010. He was also involved in the management of some Asian portfolios in Hong Kong during 1993 to 94. Dr. Maldonado holds a PhD in laser physics from Oxford University and an MBA from the Cranfield School of Management. Thank you, Dr. Maldonado, for taking time to attend this interview with us. Despite investors being unanimously optimistic on global recovery after the QE tapering announcement in December last year, however, many do not expect to see growth in Asia to pick up significantly this year. In fact, most Asian stock markets started 2014 in red and continue to lose grounds today. In your view, will Asia continue to deliver a steady growth?
That's a really interesting question. The first thing I would say is that unfortunately I don't think that investors are unanimous in their view about growth. I think there's still a lot of uncertainties. We are very confident that the US is definitely on a growth track, but I think there's a lot of people out there who've yet to be convinced. Secondly, I would say that Asia has actually performed very, very strongly since the global financial crisis. The recovery was a lot faster in Asia than in the United States, and the recovery was to a higher level than in the United States, both in terms of earnings and GDP. So actually Asia has outperformed the US in terms of fundamentals right from the beginning of the financial crisis, and I think that will continue to be the case. I think there are better growth prospects here, there are better demographics, there are better fundamental reasons why we should expect to see strong growth in Asia. So yeah, we definitely expect that to continue.
How confident you are about the investment in Asian equity markets as compared to the other equity markets?
Again, that's a good question. What we would say is actually, based on fundamentals, we wouldn't have expected Asian equities to underperform, but they have. Investors have preferred the safety and liquidity of the big mega cap stocks in the United States and in Europe over the growth and the cyclicality, the economic exposure of stocks in Asia. We think that'll change. We think that'll change in 2014. We think investors will at some point transition from being very risk averse to being more interested in growth, being more interested in exposure to the better economies and better demographics of Asia. So at some point in 2014, yes, I would expect markets here to outperform. They certainly deserve to. They have higher earnings, they have less volatile earnings, and GDP is stronger here in the region.
Are there any equity markets that you favor in particular?
In Asia, we would favor the North Asian markets. So principally that means China and Korea. But also we see good value in Hong Kong, in Thailand, and to a certain extent in the Australian market. The markets that look very expensive to us are Indonesia and Philippines in particular. But even within all of those markets we can find good value, especially amongst financials and cyclical stocks. That's stocks that are exposed to the economy, so consumer discretionary, materials, stocks like that are very exposed to the economy. We can find really good companies that are very profitable, trading at very cheap valuations.
With the Chinese broad-based reforms and the hefty local government debt looming on the background, What is your view and how do you position your portfolio in the Chinese equities?
Again, that's a great question. I would say I think China does have an issue with debt. In certain sectors of the economy, I think the debt is too high, but I don't think it's in the local government sector by itself. I think that it's in the state-owned enterprise sector. We know the debt is not in the federal government. We know the debt is not in the listed companies, so it's split somewhere between local government and SOEs. So I think the reform is really important for both of those sectors. Definitely they need to reduce their dependence on debt. And I think the key in China for investing, as it was already in 2013, for 2014 is going to be being very selective. So we have stocks, the so-called new economy stocks, that are favoured by the whole reform agenda. So in 2013 that was consumer stocks, internet stocks, clean tech stocks, so green power, wind power, solar power, clean energy stocks. They did very, very well, whereas the broader market was down. They were up very, very strongly. That exact same set of circumstances won't happen again. It won't be the same stocks, but again I think investors will need to be very selective and try to focus on the stocks that are favoured by the reform agenda.
What are the risks that you foresee and how do you manage the downside risks of your portfolio?
I think there are many risks to the outlook for Asia, and to be honest it's very difficult to manage the downside. It's very tough. Many of those risks are political, so we have elections happening in a number of countries in the region, Thailand, Indonesia, and I think very importantly in India. And the outcome in those elections, in some cases, particularly in the case of India, for example, could have really big consequences for investors. Depending on who gets in and what their economic policies are going to be. But it's very difficult to hedge against that. We also have geopolitical risk. We have a simmering conflict between China and Japan, and that conflict hopefully won't escalate, hopefully nothing will happen, but the risk is always there. So again, we need to be very vigilant to it. We need to keep watching what's going on, but it's very difficult to protect a portfolio from those risks and still have a portfolio that's well invested and well exposed to the good things that are happening in the region, which are many good things.
India, Indonesia and Thailand are grappling with weak currencies, tepid growth and impending crucial elections. Would you consider these countries to remain as laggards in the Asian economy this year?
Not necessarily. So in the case of India, for example, I think that India has continually surprised to the upside. People have been very bearish about India, and yet India has done surprisingly well. There are some very good companies based in India, world-class companies that don't have exposure only to the Indian economy, but have exposure to the global economy. So I think it's wrong to think of Indian companies listed in India as only being exposed to India, and already with a new Reserve Bank of India governor, a lot of good changes have come. We've seen a change in the current account deficit. We've seen the currency stabilizing and strengthening a bit. We've seen gold imports, which are quite negative actually for the Indian economy, really come down. So there are good things happening, and we also think that good things can happen in Indonesia. I think there's a definite will to tackle the problems there, and hopefully there'll be some resolution in Thailand as well, although it's difficult to see exactly how that happens. But actually the economy, aside from the political problems in Thailand, is actually in quite good shape. So if the political problems can be resolved, then times could be very good for Thailand, for investors.
Manufacturing sector remains as an important pillar of Singapore's economy, contributing for roughly 1/5 of Singapore's gross domestic product. Nonetheless, Singapore's Purchasing Managers Index slowed throughout the final quarter last year and even fell into a contraction in December 2013. As companies struggle with labor crunch and cost pressures, do you think that the Singapore's manufacturing sector recovery is losing steam?
Yeah, I don't think that's a problem just for Singapore. I think that there's a lot of competition in Asia in the manufacturing space, and it's very difficult to compete on price. And Singapore, like other manufacturing-led economies, needs to go up the value chain. It needs to produce more value-added goods. It needs to automate. It needs to invest and develop intellectual capital, not just make things cheaply, but invent things and develop things. And I think that's happening in Singapore. I think Singapore is a very innovative country. I think there's a government here that's very supportive of that. So I would have confidence in Singapore making that transition. But as I say, it's not alone. For example, China is facing a lot of similar problems. It's no longer able to compete purely on price. It needs to move up the value chain and innovate and compete on added value rather than just on price.
What are the engines or factors that will drive Singapore's economy in 2014?
I think that there's going to be a recovery in demand from Western economies. I think that's going to be a very positive factor for Singapore's economy. So a recovering US and a very strong capex cycle, which is occurring in the US, corporates in the US spending money, investing in new plant, in capital equipment, in high-tech equipment, PCs, that all plays to Singapore's strength. So I think that's going to be one key driver. But also just a better economic climate in Asia, with more confidence in Asia, including in China, but in other ASEAN countries. That's also going to help Singapore very, very much. So basically Singapore is exposed to the growth of the world, and that's been a little bit difficult in the past year or so, but I think it's about to be a good thing, hopefully, in the next year or two. So Singapore should definitely benefit from that.
Thank you, Dr. Maldonado, for sharing your insights with us here today.
Thank you.
For more information on unit trust, please log on to www.eunittrust.com.sg or talk to us at any Phillips Securities branches. Thank you.